Okay. Okay. We're here. Welcome. We've survived another weekend. How you doing? This is Thanksgiving week in America. Congratulations to all my American friends who are going to celebrate some holiday time here. It's November the 20th, Monday morning, November 20th. We just got through the weekend after the option expiry day for November 17, and now we're into the final month of trading as far as options expiry go for the third Friday of options coming up in December. We're only 50 days away from the end of the year, and so after this week, the the talk will start to show up, I think, about um, tax loss selling. Tax loss end of the year selling will come up, and we're going to see how that all plays itself out. Thank you all for supporting this old fart that comes on here and just sits here and yaps away about what he thinks is going on. I appreciate you so much for being here. Um, a shout out to all of you who took advantage of the class deal we had that ended on Friday by 5 for the price of 4. Got that done. Thank you all. If any of you have any problems with any of those links, let me know and we'll set you up. In the meantime, it's official. Class number 17 is coming to a YouTube channel near you. The class 17 will now be held December the 9th, Saturday, December the 9th, a couple of weeks down the road. From Palm Desert, live. Auntie Jen and I will do the class. Jen will be the moderator. If you would like a seat at the table to be part of the live class itself, make a donation to the PayPal account down below. 150 US bucks gets you in, and you will receive, of course, not only will you be invited into the live class, you will then get your edited version of the class as part of your donation after Emily gets my editing done of it. So thank you all for your support. I know a number of you have been asking me, when is class 17 coming? Finally, it'll be literally the second Saturday. We're down there in Palm Desert, the 9th of December, Saturday at noon Eastern time. So noon Eastern, Saturday. So it'll take about 2 hours or so. And so by 2:30 in the afternoon, you're free to go about the country. For you in LA, 9 o'clock time for Pacific time. In Europe, you're looking at 6 o'clock, depending on where in Europe you are, 5, 6, 7 o'clock, all the way to Israel. For those of you who are regulars of this channel, thank you all so much. What is the class going to be about? Fixing option trades that go wrong. We're going to talk about how to resurrect or how to fix mistakes or markets that go too high or too low too quickly against written calls, condors, cash secured puts, you name it. We're going to review ways, advanced ways to make you stay ahead of the pros and literally do what the professionals do on how to fix option trades that get nasty. And this is a continuing thing with me to prevent you from losing money. I love it when you make money. Who doesn't? You guys write options for $5 and buy them for $3. Oh, yeah. But I also really want to help you not make mistakes and or correct positions that are going against you in a calm, calculated manner, because many of you are new to this and you're not experts and you're not seasoned veterans in the complete options business, which of course you never will be, because no one ever is. But I have to give you a leg up on the amateurs out there you're up against. And I wanted to go over with you a number of strategies on how you can fix options that go against you. So that's the general theme of the channel. I haven't given it an official title title yet, but it's coming. Those of you who are new to the options channel here with me, welcome. The first 16 classes are out there, and I cannot recommend enough that you get yourselves into these classes to catch up with a vast majority of this viewing audience here. The sooner you get a hold of this info, the better. And it doesn't matter. You have to remember this. It doesn't matter at all if you're not interested in iron condors, or you're not interested in cash secured puts, or I don't want to do a credit spread trade, or you need to understand them. I need you to, it's kind of like a mechanic, there are certain mechanics out there that just like working on transmissions, and others that just like working on brakes and shocks. But you have to understand the car, the whole thing. And there are others who are generalists, fantastic handymen, handy women, can fix anything. It doesn't matter to them at all. They can fix any part of the car they want. On the options side, you have to understand the mentality of the buyer of contracts. You have to understand the mentality of other writers around you of contracts. You have to understand how institutions use options for their advantage, and that'll help you understand how you are going to use options to improve your financial position. These classes are, in my opinion, humble opinion, are an essential way to get a handle on how they work, why are they there, who plays them, and how can you play them. And now, if I end up helping you become a miniature institutional trader, conservative, aggressive, passive, wise, educated, you will score huge wins, and you will avoid losses, huge losses. You may have the odd little loss here and there. Contract didn't work out. You wrote a call on stock, whatever, and the stock went up on you, and the call turned out to be worth more money than what you got for it, but your stock went up. Now you have to know how to deal with that, and rollovers will help you with that. Again, even when you lose, you can win. But I want to keep you out of trouble with any contracts that go the wrong direction. So that's 17 coming up. All right. Thank you all for being here. Lame Duck, welcome. Richard Garland. Hector is here. Maria is here. Alberto, we can now begin. Thank you, Robert Mailout. Good to see you, pal. Thank you. We'll see you tonight on the other channel. BW starting the day ranting over on the pre-show, he said. Double D is here. Aurora, Mandu number 5. Good morning, good morning, good morning. Wing Commander, Chase, Rosita, Karen, Amy, CKT, Coffee Kids Trading. What's going on? Welcome. JJ, shrinkage is your friend. Merry freaking Christmas. Exactly. Walter is here. How you doing, Walter Young? Ricardo, Larry Titus, good morning. H. Gregory's here. The thumbs ups are coming in. I appreciate this, guys. Bobby Atkinson, welcome. Flint Creek is here. LS, is SoFi on sale, or we think it could go lower? I already sold January 2025 cash secured put strike 750. Also looking at June 2024 cash secured put strike. Absolutely good stuff here. I love it. Go. Who cares? Number 49. Good morning, Uncle Bruce and gang. Luca is here, number 50. And I'm late. Ciao to everybody. Dude, still on sale under 7 at the moment. Alex is here. A Tasty Donkey is here. WDBC Now here as well. Yeah, welcome all to the show and to the program from wherever you're watching me from. Welcome to my European friends, folks out of Asia, Australia, South America, Europe, Canada, of course, the Caribbean, and America. My American audience, welcome. My wonderful, wonderful American friends. Cannot wait. Jen and I can't wait. We are counting the days to get out of here. This is the 20th. 11 days from now, we're heading to Palm Desert. Jen has a doctor to see to get a new hip. We have work to do. But before Jen sees the doctor, we do class number 17. So that'll be your chance to wish her the best, and we appreciate you all. All right, now look, the title of today's show, IBM rips off its employees Is this the new normal? Those of you who don't know, I caught an article this morning that says that IBM has decided to change the way they're going to fund their portion of employees' retirement plans, these 401ks that employees have across America. It used to be in the old days, prior to the 1980s, into the 70s and the 60s, and going back, if you worked for a corporation, usually a larger company, you would be part of a pension plan that was designed to ultimately reward you for your years and years of dedicated service to the company with a pension that you could rely on. Guaranteed pension payouts. Lobbyists on behalf of the brokerage business, corporate America in particular, managed to convince federal regulators to allow corporations to opt out of these kinds of plans. And it was simple why. Large corporations used to have to guarantee a return to investors for their money, a pension money. And you'd have an employee get paid X amount of money per month. A percentage of that would be put into the pension plan. The company would match it. That money would then grow. The company would then hire entities to manage the money and grow it. And at the end of 20, 30, 40 years of service, once you hit 55 or age 60, 65, depending on the company, you would then have a pension you could draw on. And if you worked longer than, say, you could start retiring at age 50 or 55, you worked every year after that, your pension payout would be higher and you'd know what it is. And this would be a motivator for people to not leave companies after 10 or 15 years of service, because it was beneficial for people to stay with an organization for all the benefits, including a guaranteed pension payout. The 401k came in 78 or 80, whatever it was. And the deal was that this was sold. It was sold to regulators in a way that said this allows the individual to do what they want with their retirement. And it gives the individual more empowerment to do what they want. And if they move to another company, they can take their pension with them and keep contributing and turn into an IRA and on. It's very complicated. I am skimming over a zillion details because this is not the point of my rant today. My point of the rant here is this. After corporate America was allowed to back out of guaranteed pensions, America ran away from guaranteed pensions and put the onus on its employees. And so there are millions and millions and millions of Americans who have been screwed by losing guaranteed pension benefits. And the old days of grandma and grandpa having a guaranteed pension until they died is over. The only guarantee that was left was Social Security. And again, back in the 60s and the 70s, lobbyists were saying to the government, allow companies and people to have these 401ks, because at the end of the day, Social Security is the safety net. You don't need another one. And this way people can choose their own investments for their 401k, and they can do better than what the companies are offering. That was the sales pitch. And the reality is some have done well and some have not. But the Social Security benefit is theoretically out there. Problem is that every politician, not every, but a lot of politicians are saying this thing is unsustainable. The Social Security thing has to be changed. Americans are living longer than they were in the 1950s. We can't afford to pay people in their 90s Social Security. We gotta delay the beginning of it. We got to limit how much we pay them. We got to take top income earners and tax them for half the money, because we can't afford to fund everybody. And so now Social Security's safety net is under tremendous risk, and the 401ks are working or not working. And so we have a gazillion Americans out there who are going to be facing an uncertain economic future as they come into retirement. Is it any wonder a 25-year-old kid, a 30-year-old recent graduate from university, a 35-year-old who's been working 4, 5, 6 years now, sitting on $250,000, up to $250,000 or more in student debt, facing 8% inflation, looking at 10% car loans, can't get a house, can't get a mortgage, and now they see the Social Security net falling apart. You think they wonder why they're upset, and who's leading them into the future? 80-year-olds in the Senate, wackos in the Congress, and White House participants. They're just throwing their hands up, going, they can't relate to what I'm all about. And now today, IBM says we're changing our 401k program. It used to be that if you work for IBM, you could put up to 6% of your salary into the 401k program, and IBM would match that with 6%. And then you can dictate what that money goes to. Either it goes into IBM stock. There was a stock program available where people could just get IBM stock, or you could put it into different kinds of investment funds, or you could, depending on again, where you live and how this works. And I'm not a tax expert, but there were people who were thinking, well, I'll go into an IRA and I'll self-manage and blah, blah, blah. IBM has said, we're not doing that anymore. What we're going to do now is we're going to limit how much we're going to match. We're not going to match up to 6%. We're only going to match up to 5% now. That doesn't sound like a big deal, but it is a big deal. If you're a $100,000 a year employee at IBM, and that's not a top-end person, that's like middle of the road. Even that isn't much. 150 and up is probably the norm. But if you make $100,000 a year at IBM, you now get $1,000 less per year contributed to you by your own employer, number one. Number two, it's worse than that. You don't get money into your 401k in cash. You get an IOU. What's happening here is IBM has decided that instead of taking $500 million a year in cash and putting it into 401k plans for their employees, they figured out that we'll just give the employees an IOU. In other words, we're giving you $5,000 on your $100,000. We're giving you $5,000, but it's a loan, and we'll pay you interest on it. Kind of like what the Treasury rate is, kind of 5% right now. Kind of, it fluctuates. If the rates go lower, you get less. Rates go higher, you might get more. And you can't put it into stock. And you can't put it into anything else. You can't put it into a high-performing mutual fund or ETF no, it's all strictly an IOU. And as long as you're an employee of the company, you will rack up the IOU amount, and you'll get your money when you quit or retire. Then you get your money plus the interest that you're owed. That's the story. And economists and analysts are going, this is a great plan for the employer. Shithole plan for the employee. It's garbage for the employee, but it's great for the employer because the employer keeps $500 million right now in cash in their treasury. They don't have to hand it out. Over the next 10 years, this is $5 billion that the company is borrowing from its employees via a pension. It's an IOU. If you are 35 years old at IBM and you're going to stay until you're 55, 20 years, they're going to allow you to put money into your pension, and they'll match up to 5%. So as long as you put up 5%, they'll match you at 5%. And if you're earning $100,000 now, and every year you're getting a 5-10% raise, in 10 years you'll be making $150,000, and in 20 years maybe you'll at 200 to 25 inflation and your advancements. You are talking about, for you personally, hundreds of thousands of dollars in lost potential retirement plans. The top 1% of the IBMers out there, the top directors, the top senior VP people, they're getting compensation in cash and stock. We call it cash and prizes, cash and stock. Most other employees, 98% and below, 95% below, they don't get any stock. They used to, not anymore. They're not going to get stock. So the company isn't diluting their share position by issuing more stock. When they do buy stock on the open market, there are fewer shares outstanding. The only people getting stock are the top people. The corporation is saving $500 million a year this year. This is going to grow by $50 million a year. In 10 years, it'll be $1 billion a year saved in cash in-house. This is going to enhance the value of the stock of the company. This is going to make IBM stock more valuable. This is going to make the employees of IBM even further behind, because what they are able to do now and have been able to do is get stock. Now they can't get stock anymore. And so the ripoff is even larger. The longer employees stay at IBM now, the worse off their return could be for their pension. Yet the IBM people will say, no, we're paying them interest on their money. What we owe them, we're going to pay them interest so that when they quit, they get the money and the interest. They actually, they're making money. What's the inflation rate in the head office area of IBM, Connecticut? How much has the cost of living gone up for IBM employees or anyone else in the last 3 years? It's not 5% a year, right? Even IBMers are losing if they have just cash on their hands. Now the question is, again, this is me asking you, will other corporations follow suit? And why wouldn't they? Look, if you're a corporation and you can go to the bond market, to bring money in to build a new division, expand the business, use the money to buy back stock, blah, 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 blah. If your corporation is of the mind that we're not going to pay much in the way of additional dividends here, or we don't pay dividends at all, or we have been buying stock back on the open market for years and years and years, like the Facebooks and the Amazons and the Microsofts and then hundreds of other companies. This is not just for the Magnificent Seven, by the way. This could be any corporation in America with like more than 500 employees. This is a lot. These companies out there, their board of directors have got to be sitting there going, "Oh, look, we're buying up stock with cash, and sometimes we borrow money because we have money sitting offshore in Ireland, like Apple, and we can't bring that money back to the United States. It has to stay in Ireland, but we can borrow money in America to buy back our stock." And the interest we pay is a write-off, which is, taxpayers of America are subsidizing the buyback of our own stock. Is this great or what? What a great country we have. So socialist. Now what we can do is we can restrict how many shares we issue from our treasury to our own employees. And now we don't need to buy those shares back on the open market to keep the share count where it is, because they're not getting any stock. We'll just give them an IOU for money. And so instead of us borrowing money to buy stock back that we gave to our employees, we don't give them stock. We just give them IOUs instead. They're the bond holders. So now we don't have to go to the bond market. We don't have to go to the bond market and borrow $5 billion every couple of years. Yeah, we just won't give these folks $1 billion a year in stock. Hey, that's pretty good. But, the president and the CEO and the CFO and the board of directors, other senior officers, like the top 25, they get stock compensation, bonus money. So we'll pay them $1 million a year salary, $2 million a year salary, and $5 million in stock, at a 15% discount to the lowest price of the year, blah, 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 blah. Those guys will be protected because we don't want to lose our top talent. Code writer so-and-so that gets $120,000 a year, they're a dime a dozen. And aren't we trying to replace our US-based code writers with code writers based in India for $30,000 anyway? Why do we give a crap about these people? Because we don't. They're a liability. They're not an asset to us. We can replace these people. Isn't AI going to make this happen anyway? So corporations are thinking, yeah, this is great. We'll issue less stock from the treasury, meaning we buy fewer shares back on the open market. We don't borrow money from banks and pension funds and hedge funds and ETFs and insurance companies by issuing bonds. We create our own in-house bond program by issuing IOUs to our own employees. This is the greatest thing ever. And there is the new normal. Is this going to become a new normal for a lot of American corporations? The ripping off of its own employees. Because look, if I'm an employee at IBM and I found out that my $150,000 a year job, I just lost 1% ability to contribute to my plan with the company matching. That's a lot of money. That's $3,000 a year. That's a pay cut. That's a retirement pay cut. Compound that over 20 years. This is a lot of money. 60,000 without a raise and inflation and returns. This is bad news. Plus, I can't put the money into where I want to put it. I must hold this IOU, and I can't change it into anything else. Now the phone rings, or I get a text message from Mr. or Mrs. Whatever saying, "Hi there, I'm with the headhunting firm of Jones and Jones. Would you be interested in having a coffee to talk about your future?" Yeah, I would be interested in talking about it, because the topic of discussion is, I understand you just took a 17% cut in benefits for your pension, and you're at 150,000 now. You're going to be a 250,000 to $500,000 a year employee over the next so many years, and even there, you're not getting any stock. You're still a peon. Would you be interested in joining another company that would guarantee you a 10-year guarantee pension plan that is matched 1-for-1, 2-for-1, and it's whatever you want it to be in stock and or prizes, up to you. I might be interested in that. Yeah, I might be very interested in that, because if I can switch a job from 150 to 200 right off the get-go, and that plan is a 6% or 7% pension, whatever the maximum is allowable, and it's matchable, this is so much better than IBM already. Like right off just to start with, I'm ahead more than 3,000 a year. I'm ahead 6,000, 7,000 a year. Yeah, I'm interested. Yeah, this next 20 years, yeah, the compounding effect of that. Talk to me. Yeah, let's have a coffee. All of a sudden, every IBM employee is ripe for the picking by the competition. That's what's going on. Now, the question again is, if you're working at IBM and you are a key person, are you going to be chased? If you're not a key person, you're one of 5,000 people in a set set area of the company. Are you a dime a dozen as far as this business is concerned across America or not? This is where we have to find out what's going on. Now, for those who are 50 and older at IBM now, they're sitting there going, I have 5 years or less left to go. I'm 53. I only got 2 years to go, and I'm out of here at age 55 anyway. Not going to make a difference to me. Losing 1% over the next 2 years on the gross. I've made up all this already. I'm out of here. It doesn't matter. But if you're 30, 35, and 40, IBM doesn't want to lose 40-year-olds. You've put 10 years in already. These folks shouldn't be at risk, but now they are at risk. And so could it be that a bunch of 40-year-olds, like 38 to 48-year-olds, are going to look at their personal scenarios and go, I have been called every year by a headhunter for the last 7-8 years. I've just been called all the time. Do I want, would you be interested? Would you be interested? I got to take these calls. Now, some of those folks might say, I kind of have had enough of this BS. IBM split in two. This is happening. I'm not winning here. I am being I'm treated like a liability. I'm not being treated like an asset. I'm being treated as a liability. It's time for me to be my own boss rather than be someone inside of a department, because this company of whatever hundreds of thousands of employees, I'm lost in the ether here. And it used to be that, you would never leave a company like this with all the benefits. But now that these benefits get cut, I don't think so. Maybe it's time for me to be my own person. And then there are the others who are going to go, I'm 46 years old. I've been contributing now for 15 years into my pension and what have you. I got $250,000 packed up over here. And there's this guy on YouTube that my brother-in-law told me about, my sister-in-law told me about. He has no hair except for a little bit on the very top there. That's going away. Whatever hair he's got left is white. He's an old man, and he talks about, why don't you manage your own assets and not work for anyone ever again? And if you've got $250,000 that you can self-manage, I don't know why you're working for anybody. If you're going to become an option writer, you don't need a day job if you got $250,000 to manage. I don't see how that's necessary. I just do not. Unless you're making $1 million a year, I don't think so. If you've got $250,000 of assets that are in your IRAs, 401ks, you have equity in your house of $500,000, and you can get your hands on $250,000 of it in self-management. You don't need a day job anymore. You haven't needed a day job since the day you got to that level. And there are people who watch me or hear about me who think to themselves, well, geez, I can pull 150 out of my house like chump change. It's just I got to pay, 6%, 7% for it, 8% for it. I've got 150,000 in my 401ks or IRAs, but they're all in these funds that are, crap. Maybe I should realign my assets and I can put them together under one management thing. And if I hang out with this group of his, learning how to write these options, I should start taking these courses. Maybe, just maybe, I can generate way more income on my own money than I need, than this job will ever pay me. Because look, if you're getting $20,000 a month, think about that. You're getting $20,000 a month in salary. That's $10,000 every 2 weeks gross, right? Less your deductions. What are you getting? $6,500 every 2 weeks? That ain't chump change. It's $13,000 a month. For a lot of you, you're going, whoa. But what's $13,000 a month in the option writing business? There are people here making $20,000, $30,000 a month writing options right now, and they don't have $1 million in the market. What's going on? There are people here making $50,000 a month, $80,000 a month on this channel. They're making it. They never made $20,000 a month at a job. It might be time for a few folks at IBM to reassess themselves and go, I'm a smart cookie. I studied. I got a master's degree in accounting, in management, in psychology, whatever you did. I'm an IT engineer. I'm a software writer. I'm a whatever. Whatever you call yourself. If you're smart enough to work at IBM, okay, you're way more than smart enough to do this. I have idiots doing this. I have people who call themselves idiots doing this, and they do very, very well. The host is an idiot. You can't go wrong. The teacher's an idiot. How can you not make money? So those of you out there in corporate USA, corporate Canada, corporate UK, Europe, wherever you are, if your employer has been sticking it to you now for the last several years in a very subtle way by trying to sell you how great they are to you, but in reality, they're tying you up into knots and all kinds of restrictive policies, and they're trying to get you to sign non-compete clauses when you get new job offers, or you get promoted from this division to this division, and you get all kinds of restrictions on this and that and the other thing. Maybe it's time to say, I'm out of here. I'm going elsewhere. And you know what? I have enough right now through my own assets. I could afford to not work for a year to assess myself, reassess what I'm really going to do with myself. I'm not going to jump into another job right away. I'm not going to play that game. I played that game before. I got panicked and I jumped into somebody else's employment game, and I had a 5-year tie-up and blah, blah. I'm never doing that again. This time I'm going to take a year off. I'm just going to quit. I'm going to take my money and I'm going to reorganize my affairs. And I might not work for anyone ever again as an employee. I might only be available on a contract basis once in a while under my terms and conditions. It's called taking control. And part of it is I'm going to watch this guy's classes. I'm going to quit my job And every week, I'm going to watch one of Bruce's classes every Sunday or Saturday, and I'm going to watch another class on Wednesday. And by the time I finish, he'll be up to 20 classes by that point. I'll have watched classes for so many months, followed him every day on the market, on the show, and I'll already be writing contracts and slowly be reorganizing my entire portfolio so that I can be an option writer and truly see whether or not I can not work for anybody ever again. And I am certain that this will lead to a bunch of people potentially to be able to say, best thing ever to happen to me was when they tried to screw me on the pension. Boy, they tried to rip me off on that 17% reduction and give me an IOU on my pension. I said, up yours, I'm out of here. And boy, am I glad they did that, because this gave me a life where this is all I need to manage my financial affairs going forward. I got SoFi as my banker. I got Uncle Bruce as a source of information and advice as to how to handle my affairs, and I'm on my way. Oh, and I did hire an accountant. I do have an individual to help me with my needs. Oh, absolutely. And for some of you out there, you may find that you're going to create a corporation, and the corporation has a mix of businesses in it. One part of the business of your own corporation is handling your contract work. You don't hire yourself out on a contract. A corporation is hired out by company XYZ to perform a service for a certain amount of time, and you just happen to be the person doing that work for that corporation. The corporation also handles investments, which you direct. And you might well find that you are renting the basement of your house, or you are sitting on a second home with a friend or a relative, and you're renting that. You're a landlord kind of as well through the corporation. This corporation has various divisions, but you don't work for anybody full time anymore. You're working on behalf of that corporation, and you're deciding how much to take as salary, how much your wife takes as salary, maybe your kids take a salary, all under the limits of the tax department, and everything is a write-off through the corporation. This could be the change of your life that you're looking for. Maybe corporate America is helping its employees wake up to the fact that its employees are not assets to their corporation. They don't view you as a necessary asset. They view you as an inconvenient expense, and they're trying to cut costs everywhere they can. And you are one of the prime targets, believe it or not. And it might be as simple as, well, we could give everybody a 6 or 7% pay raise, but we'll just offer 4.5. And if we lose 1% of the employees because they fed up, perfect. We don't have to announce a program of layoff program. They're just walking out the door anyway. We'll replace them. That has to be the attitude of senior management, I'm guessing. And if you're a 1%er, why wouldn't you think that way? Why wouldn't you think about the fact that, I get $800,000 a year. I get $2 million a year in stock options. I'm sitting on $20 million of stock options I got over the last 10 years. Do I need to give a crap about 5,000 employees at that branch office somewhere, or these people? No, I don't. I'm okay. I'm okay. I don't care about anyone else. And that, when you get to that level, that can happen. And these folks are 50, 52, 54, or 46, and they're kind of going, I got 2 homes bought and paid for. My wife and I and the grandkids and kids, we're doing super fine. Hey, I got a lot on my plate. I don't have time to worry about some secretary or some assistants or some grunts in this division over here that make 100. They get 120,000 a year. What more do you want? You're being well looked after. Shut the hell up and take the money. Not knowing or not caring that these $100,000 employees, after tax and after rent or mortgage and expense, they got $1,500 a month to live on, and they still owe $80,000 in student loans. And that can never be forgiven. I mean, on and on it goes. So, all right, there you go. That's me ranting and raving today about my topic of the day. IBM rips off its employees. Is this going to spread here? I'm wondering. Thank you, everybody, for being here. Alberto, 401k are a great way to start, but taking control of your money with Uncle Bruce's method of trading is much more profitable. I did the math on 500k in a 401. I've lost in 1 year over 200,000. Get the classes. Savage. Number 143, checking in from sunny Southern California at the Waldorf in Monarch Beach. Family sleeping, and I'm drinking coffee, watching a beautiful sunrise, and listening to Uncle Bruce before I trade. Thank you, Uncle B. Right on, buddy. Dario Woods, Uncle Bruce, I bought my call option a little in the money, 70 cents, asking and strike price 13, expiration dates December 1 for GameStop. Was that a good deal to do? You bought a call. You bought a $13 call. Okay, you're obviously not a regular. Zed, good morning. Alberto, what's your average? Dario, this is my first time doing this. Is where do I look? Dario, you are new. Dario, you please don't be buying contracts that have no time left to live. What do you do? You're obviously not. You didn't watch first and then trade, did you? You traded and now you're watching. Like, Dario, I'm not sure whether to believe you on this. What's going on here? I don't say Chris Evans. I made the decision to leave the hamster wheel 2 years ago, and it was a great decision. Nervous at first, but now I'm proud. House husband, 3 kids, age 2, 5, and 9. It's very rewarding. Covered calls, baby. That's what it's all about here. Zeta State, Uncle Bruce, I bought 80 GameStop deep in the money option, $10 strike for $10.50 average, cost expiring Jan 2025. I could write 50 contracts this week, and should I roll the Jan 25s to Jan 26s? If you can, you don't have to do anything on the 25s for another 6 months if you do not want to. The only way I would do it is if the price was right. So if you can shift from 25s to 26s for like 50 cents, great. Otherwise, keep writing and write 50 contracts. Absolutely. Can you write, say, I don't know, Jan 2024s? Can you write, say, June 2024s? Or can you shift to 2026s and then write Jan 25 calls at 15? The cart before the horse. You might be in a position to be able to roll your calls forward to 2026 at a cost of 50 cents a buck a contract, let's just suppose. But the money for that will come from when you write calls against those calls for Jan 2025. So you own 2026s, you're writing Jan 25s, you're bringing in what, $3.50, $4, whatever you bringing in some dough, and you're paying for that shift from 2025s to 2026s with the premium you just hauled in and more. You still got credit. You should still have credit. The stock's at what, 1302 right now. Options. I'm just looking at options if I can get my big ass iPad to work. January 25 10s are showing what, $4.95 to $5.90, last at $5. So that's more than the 90-10 rule. So you get 5 or more to sell them. Absolutely. If you're going to make a rollover, but Jan 26s are 6 to 730, and they're only worth 302. So you don't want to pay 6. Like getting 5 to pay 6. If you can sell for $5.50 and buy for $6, okay. But if you're going to write Jan 2025 15s, you're going to get 320 to 380, maybe 350 for those. So you're paying 50 cents to $1 to roll up to then haul in 350 because you can't write, theoretically, you're not going to write Jan 25s against the Jan 25s. So I think we're on the same page here. Those of you out there watching this, food for thought for all of you. If you're all into, like you should have been, Jan 2025 contracts, whether they were 10s or 8s or whatever, and you can shift to 26s for not a lot more money and now start writing 25s for premium, now this makes sense. So There you go. Can you do them? The spreads are wide. They're not going to trade heavily, fast, in megaseconds, like in microseconds. So just be patient about it. It might be done in increments. There you go. Alberto Dario, look at what you paid for the shares, cost average. Credit Savage, good morning, my fellow simpletons and degenerates. Ready for another week of red or green or sideways. Hope the Dow spikes 1,000 points or drops 1,000. I don't care. I make moolah, Alberto, the credit living a better life. Enjoy the vacay, buddy. BP, I had my interview asking for a pay raise nearly 3 weeks ago, had my boss and an HR person in the room. I got the usual spiel. Everyone got the 3% pay raise when inflation is at 9% in the UK. I've heard nothing since. I don't even know why I don't understand why you're still there, unless you can't find a job somewhere else. I get it, but boy, is this typical? Man, I hear this too often. Stephen, good morning. I'm number 79. Dario, I paid $70 for my premium on this stock. Again, I'm not interested in telling you what to do with a contract that expires very shortly that you bought long. I'm not here to talk to you about speculating on a company stock on a one-way trade. I don't want to sound cold like this, but I just, this channel, we talk about writing options and being the casino. You are the slot machine player, and I can't help you on that front. You want to be successful in the option business, you've got to be a writer of contracts. Now, you don't know how to do it. I get it. I mean, 99% of people out there don't know what options are anyway. They don't know how to write them in the first place. So I got to take you back to class number 1. You got to watch my first and second class, the first 2 classes, because they explain how options work. And the question you're asking, I think, is lesson number 1 and lesson number 2. Now, anyone else can help you. They will, but and I don't want to come off like some pretentious guy that, unless you take my classes, you're not going to get anywhere. We're not here. This channel is not here to talk about unusual option trading activity. You can get that from the Nigerians. I'm not here to talk to you about buy a contract for $70 that's going to turn into $700 in 2 weeks because you need it to do something. I'm not here for that. It's just not why this channel exists. 99% of my viewers will tell you that. But Dario, if you're really here to learn about, what it is we do, I welcome you to the family. I'm glad you're here, but I want to make it clear from the first moment that we're here, we're serious about making money in the option market, and we're just not here for quick flips and scary trades and short-term option buy positions and stuff. I don't know why you bought this contract. I don't know how you found the idea to want to do it. But I doubt I recommended it. I doubt anyone else recommended you do this trade from this channel. I can't imagine. But we welcome you. And if you are truly serious about becoming a winner in the market, like everyone else pretty well is, especially the members. I mean, you see the folks with the green title beside their name. They're here to make money. Welcome to the party, pal. I sure hope you're going to be one of these folks. Class number 1, class number 2. Anyone will tell you. Bertie, you know this, man. Forcing myself and the family to live a better life. Laugh aloud. The kids spent 5 or 6 hours these past 2 days just swimming in a posh, heated pool. Rough life. Well done, Credit Savage. BP, I had a job interview Thursday, just gone. Just gone. 2 of my colleagues handed in notice this morning as well. BP, thank you. BP, I don't want to be rough on you either. I'm not being rough on you. I love you. And these comments, all too common. You got to look out for number 1, buddy. They're not looking out for you. You're an expense. Okay. Yeah. Hector Zeta State. Good question there. White Feather Dario. Did you just buy a call? That's not really what we do here. See, Testy. Nice work, BP. I'm waiting until January, planning on going to a conference on the company's dime, and I'll be handing in my notice. Alberto, Dario, I thought you were selling covered calls. Take the classes, best investment you can make. There's good advice there. Credit Savage, Dario needs to buy class number 1. Mr. Premium, I'm the second 80-second thumbs up. Bruce, Alberto, Dario, we are in the casinos here. We're not the players. So sorry, I missed your message earlier. BP, just waiting on news of the interview, says BP. Splair, neat. Larry Titus, we are open, Bruce. The bells have rung. We're up and we're running. We're ready to go. Let's get richer. Thank you, my friend. I appreciate you. We're up 36 to start the day on the Dow. Welcome, one and all, to the party. Nice to have you here. Marie B, does writing mean selling contracts, whether on the call or the put side? Yes. You sell first, buy back later. That's called writing and covering. Yes. Marie B, yes, it does. Touchgrass, yes, you can write on both. Bagel, I love being part of this family. Bagel Babe, thank you, Bagel Babe. Splair up, the premium is what you get, not what you pay. Exactly. There, yes, I'm here to learn. I don't know what I'm doing. Damn, wrong choice. Okay. It's not too late. It's all right. It's all right. Dario, you've joined a channel here where you are surrounded by people who've been here a long time. And they're great. They're absolutely the best on YouTube. Bagel Babe, 16 months. Membership pays for itself. Easy, Dario. Welcome to the show. Marie, thank you. White Feather. Zed Estate, 23 months I've been here. Where has the time gone? Splair, class 16 for writing number 2. It's Richard Carlin, 32 months. I've been here 32 months as a member, a paying member of this channel. That is a sign right there. Bagel Babe, Gold Bagel member. Zed Estate, Gold Bagel member. Richard Carlin, Gold Bagel member. These folks are dropping $25 a month to be here. You multiply those months by $25 and you can see their commitment to the channel. And they've made more than that many times over. Exciting. Dario from Credit Savage, you just wasted $70. I suggest you invest in you and buy class number 1. Start there. Figure out how to write one contract, just one, and start with that. Buy class number 1 and go to my website. Dario, head over to my website. It's stockmarkerswithbruce.ca. There it is right there. Yeah, the description on all these classes is down below in my description. If you want to get to that, you can head over to that class. You can buy class number 1. It's $150. You can watch it as many times as you want. It's longer than 2 hours. That's where you start. And then go from there, my friend. We're all excited for you. Believe me, we have had so many people join this channel who were complete noobs, who knew jack squat about options, and they have come a long way, baby, and are doing quite nicely. You can become part of that family if you like. All right, there you go. We're down to 660 on SoFi. Says LS. What else is going on here? White Feather to Marie, you are welcome. Splair, it's okay. My first call was a buy on Matterport. Lost $30 to right after that a Matterport call last summer. BW, been a member for 32 months. Geez, what am I thinking? 32 months. Uncle Bruce, by the way, I and so many others view money as completely changed now. It's not a scary subject matter when you're in control of it. Writing options changes lives. I can attest to that. Right on, buddy. Right on. Zed, 25 per month US. Worth it, I think. Splair, well, if he bought on Friday, he maybe waste only half of his dough. Marie, 40 months Canadian laughing out. 40 months and it's Canadian laughing out loud. White Feather, Dario, you will not regret buying the classes. These are members telling you, just they know. BW, Dario, thanks for your Dario, thanks for your $70, says an option writer out there. Not personal, just business. Learn to write. Pharmaless. Can I get the link to the Discord channel, please? The Credit Savage of Wall Street. By the way, Pharmaless, send me a private email and I'll get you the info. Credit Savage, on my new profile picture, I am thanking folks like Dario for financing this wonderful vacation trip with the family right before Thanksgiving. Thank you, gamblers, from the bottom of my heart. I love that. I love that avatar. That is awesome. This player, damn, I was shortly shocked on the TTW call. It's saying last purchase was 001, but the bid is 37. Ask is 44. Alberto, at least he pick up the dips. Goes well with chips. Right on. Right on, Alberto. Oh, my goodness. Thank you all for popping in here. We're at 1303 on GameStop. I think we're unchanged. We're up a penny now on GameStop, 1304. What else is going on? We're up 34 on the Dow. We're up 6.7 on S&P. We're up 59 on Nasdaq. So we have an upstart to the morning. $1.25 higher on the oil market. GameStop up a penny. SoFi at 666, down 17. It's been a pattern lately that SoFi dips first thing in the morning and then slowly rallies. We've been seeing that a little lately. Yeah. See what happens again. Apple is up 153 now to 191.22. Netflix is up $1.19. Adobe up 566. AI up $1.05 at 30.34. Nvidia is up 145. Tesla's down 41 cents. By the way, Nvidia announces their results tomorrow night after the bell. Nvidia tomorrow night. Tesla down 41 cents. Rocket Lab up 13.6. Make that 15 cents on Rocket Lab. $4.36 last trade. It's kind of the high of the day, roughly 316,000 volume. Interesting stuff. What else is going on? Hang on, let me go through some more. Matterport down 2 cents. SmartRent up 4.5. Owens Corning down 1.25. We got ATIP up 55 cents, but I'm not sure if that's right. That might be Friday's close. Doesn't trade that often nowadays with the split or reverse splits. Unity up 42. Google down 37. Moderna up 72. Cisco down 13. Pfizer's up 6 cents. IBM down 41. HPQ down 12. Microsoft is up 5.23 at 3.75 on this news with this guy, Altman, whatever his name is. Got the 3.77. Now we're 3.75. Still up 5.45 today on Microsoft. ME is at 89. Looks like a 4-cent gain this morning. We need that stock to break $1. It needs to break $1 on the New York Stock Exchange and close above $1, and then the delisting and re-splitting of the stock is off the table for another 6 months or a year. So we're 11 cents away from that, and I wonder if there's a move afoot to make this happen. I don't know. Amazon 146 now, up 82 cents. Home Depot down 42. Vanek Vector Semiconductors SMH is up 21 cents. Goldman Sachs down 61 cents. Boeing is up 556 to 213.60. Meta, the old Facebook, 337.98 up 294. Target down 11. JP Morgan down 4. Costco up 3.29. Walmart up 26. Disney up a penny. American Airlines up a penny. DraftKings up 38. AMC unchanged. Royal Caribbean down are up 16 cents. Back to IBM. Again, IBM is down 29 cents this morning on the trading session. The story came out today that they are going to alter their payouts on their for their pensioners, for their pension plans, and it's nowhere to be found. There's no story to be found on Yahoo Finance about it. Interestingly, I'm just curious whether I will find this story on Market Watch. Stand by, everybody, as I try to pop that up there. IBM. Hang on. Come on. Nothing there. I got nothing there. Nope. And then press release. I got nothing. I don't see an announcement on this story, and I can understand why. This is actually the kind of story you release on a Friday night after the bell, and don't offer interviews about it. This is a ripoff of your own employees by the corporation, and I'm amazed that it's not a talking point in any big way today. It's just no one's saying anything. But to me, I think this is perhaps the beginning of a wave of potentially, for Americans, the beginning of a wave of a number of corporations doing exactly the same thing to their employees. I can't guarantee it. I can't not guarantee it. But this, to me, at the $500 million a year that IBM is going to retain in cash by not giving their employees matching contributions up to 6%, only IOUs up to 5%. This, to me, the next 20 years, $10 billion. I mean, this is, I am speechless at how this is not being talked about. I just, but again, I'm an old fart that knows one thing for sure. If there's anything I know, is that certain media will not criticize this deal or comment on it, because certain media out there, okay, is not employee centric, it's corporate centric. Certain media believes that corporations can do no wrong and are not to be criticized. Certain media have decided that you do not go against the corporate agenda, because if you do, your media business is in trouble. Now, why would I say that? Because if you're a publication and you get advertising from IBM, are you going to criticize IBM in your magazine or your website and watch the advertising dollars filter away from IBM? If a second company institutes the IBM plan and you criticize them, their advertising dollars disappear from your corporation, your publication. Whether you're a TV network, whether you're a podcaster, whether you're a magazine publisher, whether you're an online blogger, vlogger, who dares go after corporate America that depends on corporate America to survive? CNBC wants access to the president, CEO, or chairman of the board of IBM, or some of the IBM directors for interviews. But if you criticize those guys, they may not come onto your network. So the bias is built in that way. Do you notice IBM advertising on my channel? Do you notice IBM's logo anywhere on my screen that tells you that I'm being paid to talk about how great they are? No. So for me to criticize them, what have I got to lose? I got nothing. I really sometimes wonder about the kind of information you guys are getting and where you're getting it from and not getting, and why you're not getting it. I'm actually amazed that I found this headline. I'm grateful I found this headline this morning on MarketWatch. I happened to catch it, but it's not on the MarketWatch quote page. It's not there. And so that's making me wonder, what the hell? Very amazing. Okay. Thank you all. 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 Let's see. Let's not be mean to Dario. I agree. We're not here to be mean at Dario at all. Dario, you're welcome here. But we want to set you straight. If you're here with us, you really want to make money. And if you really want to make money, then you're here with us. Like, you are going to become part of the family. You can't be a occasional watcher of the channel and just, well, you know, I'll do a little bit what they say, but I have better ideas. No. Okay. Anyway, thank you all for popping in and seeing us. Those of you who are here, those of you who are members of the channel, you know what you mean to me. You're incredible. You're awesome sauce. We love you. If you're a subscriber, I thank you. Please become a subscriber of this channel immediately, no matter what you're thinking of me or the channel or what we talk about, or what. Just become a subscriber. Just shut up and do it. Thank you. And please, if you're going to become a member of the channel, you really want to become a participant of this channel, and you really want to make money, then you need every advantage that we can give you to help you make money. And the advantages you could enjoy if you join this channel as a member, particularly if you can become a Gold Bagel member. I'll get this out. It's going to take me a while. If you join this channel as a Gold Bagel member, you have the daily trade alert coming your way. You have the pre-alert show coming your way. Then you have this show, and every Wednesday night at 7 o'clock Eastern, you get the Prime Time with Uncle Bruce show as well. So taking advantage of all of that will more than make up the cost of being a Gold Bagel member of this channel. Thank you all for doing that. 97 thumbs ups. Thanks, guys. Appreciate it very much. You're absolutely wonderful. Glad you're here. For those of you who just are joining me now, you haven't been here all morning. Welcome to all of you. I'm glad you're here. Class number 17 is coming your way. If you want a slot and you want to join me for class 17, Auntie Jen is the moderator as usual. We will be live on the on this channel for, again, invited channel for invited students only. Saturday, December the 9th, 2023 here, at noon Eastern time. So Saturday, December 9 at noon, we're doing class number 17. And if you want in on that class, make a $150 donation to my PayPal link. It should be down below. Send me a private email and say, Bruce, I just sent you $150. I'm in on class 17. Put me down. Oh, and by the way, this email address that I'm using, I want you to send the link of the show to that address. If you become a viewer of class 17, you will join the class live. And even if you miss it, it's okay. You will get your edited version of class 17 a couple of days, well, 3-4 days after we do the class. So you're not only going to be part of the live class, if you join us live, which I'm sure you would, you'll also get the finished version of the class that others will pay for later. And so there you go, class 17. It's all about fixing mistakes. It's all about finding ways to bail yourself out of a trade that's going against you. It's all about rollovers and ways to protect yourself against trades like condors that aren't working out, or written calls, poor man covered call strategies, cash secured puts, and other credit spread strategies, ways to fix option trades when they are kind of not working out, or you're a little nervous about the market moving up or down against the position you have. You're wondering, geez, what's the best way I should do this? What should be my routine here? How do I handle this? How should I look at this how should I look at this with a psychology? What's the market thinking? What's the risk reward if I do this or I do that? People will be asking me questions on that class. I guarantee you, they're going to say, look, I did this condor like you talked about, and this is what's happening to it. What do you recommend and why to help protect me, or a way for me to give myself more protection, more comfort in making, not losing anything and making money, how to prevent mistakes. And so if you want to be part of that class, and you've already been part of the 16, whether you've watched them or watched some of them or all of them, or you've been part of it, class 17 will benefit many of you, no matter how you play the options market. If you're an option writer and you're serious about becoming self-employed to literally control your life, 17 is going to come in kind of handy. So I'll look forward to any of you who are coming through to do that. Thank you all for being here. Splair, who would roll and give away $35 just to get that 1 cent print? What's going on here? BW AI woke up this morning with some morning wood. Geez, slow down there, big fella. Splair, SoFi coming back from its low. BW AR chart this past week just looks stupid. It's not normal pattern at all unless someone wants it held at a certain range. Marcus, number 92, thumbs up. Of course, remember, BW, there's a huge short position on AI, massive. They don't want it to go anywhere. Flint, NVIDIA earnings tomorrow night. All right, Farmhouse, I saw the IBM story this morning or this weekend too on another YouTube channel. Hector, BW, I agree. Do we fear the upside? Right, Jan and April strike 30s. Luca, Trey about AI, true about AI, but it's playing well for my poor man cover call. Farmers USA Today has that article too, dated November 9. Luca, true. Farmers, I just emailed you a link. Thank you, my friend. I appreciate it. Again, these articles sometimes sneak out and they just get lost in the ether and no one talks about it. This is big news. This is a big deal, this IBM story. BW, already there, Hector. Just peeved, missed a profit grab last Thursday. We still get creeping up. Chart looks like a garbage and not natural moving into, in my opinion. Stephen Butler, I'm number 94, number 95. Thank you, my friend. Welcome, my friend. Nice to see you. BW, Magnificent 7 rides again. Just keep bolstering the market. Most of us still get alerts for tickers we own hitting new 52-week lows. Markets are a joke anymore. SPY riders are rolling constantly. Dude, today I take profits. Credit Savage, AI is having a very nice spike. Time to roll some Aprils into July. Also, those Jan 25 $30 cash secured puts I sold on AI for $12.53 a few months ago are now $9.50. Wonderful. Not buying back yet. Maybe another $2. Maybe I'll buy them at $2. Lame duck. It was worth buying the class just to watch Anti-Gen keeping Bruce in line. I sometimes see her pull out a whip sometimes. No kidding. She hits that guy live on the air. It's worth it. Beach Boy, how much for class 17? Same price as always, $150. Always the same price, $150 US. Send a donation to our PayPal channel. Our PayPal link, it's down below. And if you have any issues, let me know and we'll get you a reserved spot. Seating is limited because Jen doesn't want to have too many people in the class, because she's the moderator. So the first batch to come through, you're in. You take too long, you might not make it. So just saying, what I'm finding too is, and I'm happy to report all of this to you guys. When we first started classes back in July 2021, the very first class, I had no idea how many you would show up. And we had, 55 people in the class, and it was, we went through all of our growing pains. And then class number 2 and 3 and 4 and 5. After about 6 or 7 classes, we have turnover of people and time, like 6 months, 3 months, 5 months, whatever. And for a while, our class numbers were lower. They were a little lower. They were in the 15, 20 range. And then all of a sudden, poor man cover call writing, credit spreads, cash secured puts, class participation was building because the results were showing in people's bottom lines, and we're making money off of these classes. And up went the participation rate. And Jen started getting nervous. She's saying, we got to cut this off. We can't get over a certain number because it may be too many people, too unruly. And I said, look, I can't read the comments when I'm doing the class. I'm too busy with this board back here. I'm too busy, on my notes, trying to make sure I talk about everything. You interrupt me when necessary to redo something or re-explain something or what have you. But after a while, you have to handle it. And so Jen kind of says to me, when they start getting into that 35, 45, 50 range, you may have to stop and not allow any more in. And then everyone else has to wait for the rerun. I'm just warning it because it gets to the point. So this is why I bring it out now. The class is available. And if you're interested, make a donation for $150. Send me an email, say, I'm in, get in early, lock it in, and you don't have to worry about it. And I'm not trying to push it on you, just trying to warn you that I can't handle 100 participants. I can't. And there are way more than 100 people who buy these classes when they fully are exposed, released, and are out there. And the channel numbers are growing. More participants are coming into this game because people are figuring out, I can't make money looking for the mother of all short squeeze trades anymore. I can't make money on a hot penny stock. I'm not interested in risking thousands of dollars on a hot rumor. I would really rather work with a guy who's here every day, who has put these classes out there and who answers questions live on the air or on private email for his students, rather than buy a class from some 23-year-old guy or 30-year-old guy that supposedly has 50 years of experience that wants thousands of dollars and all kinds of commitments and who knows what. I don't want to do that. I want to buy a class here, a class there, and I want to be with this guy. I want to make money because his viewers, these people here, never leave. They don't go away. I want to hang out with these guys. There's a reason they don't ever go away. They don't leave his channel. There's a diehard group of people here who won't leave. It's kind of like Jerry Seinfeld and Kramer. There's that one scene where Jerry and Kramer are standing in the kitchen, and Jerry is complaining to Kramer about what he said, and Kramer's going, "Well, one of us is having a bad day," and Jerry goes, "Yeah, because of you." And then Kramer looks at Jerry and is leaning on the counter and goes, "Well, maybe one of us should just leave." Jerry is leaning on the counter. Kramer's doing it. They're both staring at each other, and Kramer's expecting Jerry to leave his own apartment. Maybe one of us should just leave because Kramer hangs out all the time. Love that scene. It's one of the greatest of all time. Thank you all for tolerating this channel, hanging out with us. You're learning, you're getting smarter, you're getting better at this, and you're scoring returns. And it's as simple as that. Not making mistakes, cutting out mistakes entirely if at all possible, maximizing returns, and saying to the market, okay, I'll tell you what, you know what? You want to give me $1,000 here and a couple $1,000 there and 500 here and 1,800 there and 4,500 there and the larger viewers here. You want to give me $5,000, 10 grand, 20 grand, 40 grand at a time? I'll take it in any way you want to hand it to me. It's fine. But here's what I'm not doing. I am not going to gamble my retirement, my economic future on a hot, stupid rumor that just could blow up in my face and wipe me out. I'm not doing that. I'm going to be, let's call me a nickel and dimer. I'm going to be the person that keeps the change. I'm going to take in these little takes, like casinos in Vegas, that every time you spin the handle on a slot machine, they don't make $1,000 every time you spin the handle. They make pennies off of you. Every time you pull the handle, a couple of pennies in profits on average goes to the casino. Every time. Yeah, you win $5, you win $20, you win $1.50, you get a cherry. Yeah. You get a little mini bonus. You win a $30 mini bonus. That's great. That's great. Don't worry. By the time you go home, on average, you left money behind to the casino, and they thank you very much. That's what's happening in the option market. You are the casino. It's as simple a way I can put it. And another way to put it, it's like you're selling car insurance. It's kind of like that. You're selling car insurance. The person isn't going to crash their own car. They're not going to crash their own car. They're going to pay every month a premium to drive their car, and you're going to collect the premium for them driving their car. And you're just going to take the insurance money off of these people. That's all you're doing. You're like an insurance company. You're taking insurance from people. This is what you're doing. And it's very conservative. It's incredibly conservative. And you'll be around a long, long time. Now, how good you are at it depends on how smart you are writing contracts. When to write, how to write, how many to write, at what strike price, for how long, what kind of positions should you take on these markets? Should you be doing credit spreads? Should you be doing debit spreads? Should you be doing condor? Should you do cash security? You don't even know what I'm talking about, these words. It's all right. It's all in the classes. You can take the classes at your pleasure, your pace. I'm not going to rush you. One class a week, one class every 2 weeks, 2 classes a week, 3 classes a week, up to your speed. You decide, and your budget. What do you want to sink into your economic future? How confident are you in yourself that you can do these classes? Take one, and then take the second one a few weeks later, and then the third one. Build it up. I am convinced that you're going to go, wow, just wow. I can't believe I never knew about this. Why is it that I have all this money with these investment firms, and there are all these ETFs out there. And I don't know anything about this part of the business, which is a multi-trillion-dollar a week turnover business, the options business. It is a massive, massive part of institutional trading. I don't know anything about it. I'm clueless. I had no idea this was going on, and I can't understand why no one told me I could do what Citadel does, or I can do what Melvin Capital would have done, or other hedge funds, not unsuccessful, but successful. Why is it that no one would tell me that I could do what insurance companies and banks and mutual funds and pension funds and hedge funds do all the time in those super big, tall skyscrapers filled with $1 million a year employees and more? I can do this in my own house. I can do this on vacation. I can do this in an RV. I can travel all over the United States with an RV, with one of these, and I can be an option writer, follow Uncle B, and never work again for anybody else. No one told me. No one would tell me. And then there are those who are told. They are told by you to your family and friends, and they don't believe you. They don't believe it. Welcome to the option. Welcome to the party, pal. If you've come here and you're hanging out a little while with us, that's the biggest step you've made. That is a huge first step. That if you can last up to 2 hours a day with this guy, oh, that is another huge step in your determination to make money. Then you start taking the classes and you hang out with this crowd here all the time. You are over the hump. You're on your way. And I am convinced within a few weeks, you're going to go, I can't believe I didn't know about these guys. And we've been doing this for coming up to 3 years. January, it's 3 years. I've been live every day. Welcome to the party, pal. I'm still here. Nice to see you all. So good to have you here. Oh, this is so much fun. Okay, what's going on? A bagel babe. We follow Uncle Bruce around like a bad rash. Beach Boy, one class 17 and a one-on-one. Please, Stephen Butler, SoFi took a non-cash impairment in the third quarter. Do we know that Intangible as they took the impairment? They talked about it in their release. You should be able to look up SoFi third quarter SEC filings. It's in there. It's all in there. Yeah, they took that last quarter on purpose. The analysts were saying, yeah, by doing that, they set themselves up that this quarter, it's a profitable quarter, and it'll be the first of 4 in a row and more. And as soon as the fourth one is had, they're eligible for S&P 500 inclusion in the index. So do the impairment when you're still losing money anyway. You're going to lose money, whatever their 8 cent a share loss or 4 cent a share loss was. Add the impairment to it, get that off the books, write it off. That's a future tax write-off. And now go forward with profits. Yeah, there it is. Brian, number 106, good morning. SoFi, 10 million volume for 30 minutes. Not a bad start. Mike, good morning, everybody. Brian, a stinker in to buy more SoFi at 651. Well, if you get it, you get it. We're at 671 right now. The low was 656, so we didn't hit that low yet. I have noticed someone picked up class number 17. Someone stepped in here. Thank you, everybody. Congratulations and welcome aboard. Yeah, Beach Boy is in. He's in class 17, and he wants a one-on-one, as he said.
Hello, Beach Boy.
There you go. We have someone else here for thank you, Miss S. Thank you. You're in, and Stuart's in. Thank you, Stuart. We got it. And again, make sure to send me a private email as a follow-up, because I want to make sure to write down your email addresses, because I write it down. Literally, I write it down on a piece of paper. That's how advanced I am, because my
sooner sending those emails.
You see, when I write it down, I call that my hard drive, because I hard write it down and it never crashes. My hard drive never crashes when I write down your email address.
Your pen might run out of ink.
Okay. The moderator is here. Welcome, everybody. The moderator has arrived. Thank you. Thank you, all of you who have sent in the donation to get into the class. We appreciate you. What will happen is on the day of the class, Saturday, and between now and then, I'll be talking about this again and again and again, just so you won't miss it. So on Saturday itself, the 9th of December, I will send out a link to all of you who are in the class. You're probably going to get it a half an hour before the official start time of the class. So you can come on into the classroom anytime you want, half an hour before, anything. And you're going to be talking to the class. It'll be just like this. It'll be right. I'll be standing in front of the board here and in Palm Desert. Jen will be in the room. You'll hear her. You'll see comments coming in as people say, "Hi, I'm here. I'm here." And I will be typing away, sending out links to everybody. Say, "Here's your class. Come on in. Come on in." And as the minutes go by, the classroom fills up with more and more people. And you'll see all the familiar names, and now the classes will be in session. The class will be in session. That's it.
Bueller.
Bueller. That was easy.
Oh, look at you. You had that timed pretty good.
Oh, yeah, I'm getting better at it. That was easy.
Still looks like a Godzilla movie.
Good times, everybody. Good times. Thank you all for joining in. Jen, how are you doing today?
I'm good. How about yourself?
Well, I'm okay. My show's title today is IBM rips off its employees.
Oh.
Is this the new normal?
Oh.
So what they did was they announced that I think this starts in the new year. So starting January, I'm going to guess it starts in January. So if you're an employee of IBM now, you were able and allowed to put up to 6% of your salary into your 401k, your pension plan. And the company would match it 6%.
Okay.
And you could put that money into IBM stock or into investment funds or, whatever. Starting the new year, the IBM people are going to match only up to 5%. So if you put up to 6,
Yes.
they'll only match 5.
Yes.
But that's the half of it.
Yes.
Now, you don't get the cash into your IRA, into your 401k from IBM. You can't invest that 5% into IBM stock or investment funds. No, what you get is an IOU from IBM.
Okay.
Okay, so now let me go back a step.
So are they giving you like some of the corporate margin ability?
No. Let me tell you. So if you're an employee now and you've been an employee for 10 years, most likely, if you've been there for 10 years, okay, you've survived the 3-month probation program. You survived the first 3 years of your loyalty. You survived 5 years of moving up the ladder. You're a keeper. 10 years. You're a keeper. You're not about to get fired because you're a bum. You're for real. You're a lifer. You're probably making $100,000 to $200,000 a year now with benefits. You're making some dough. You're not a $30,000 janitor. You're making money. So if you are making $200,000 a year and you're putting in 6% into your pension, that's $12,000. You're putting it. They're putting in $12,000.
Yes.
So you're adding $24,000 a year to your pension.
Yes.
And that can go into IBM stock, which pays a dividend, or it can go into whatever, whatever they allow you to put money into, which is probably a plethora
Up till
of
this
stuff.
point, it was always cash. It wasn't stock.
Correct.
Okay.
So now what IBM is saying is we're now going to go only a maximum of 5%. So if you put in 6, that's 12 grand. We're only going to put in 10.
Yes.
Not 12.
Yes.
The 10 is an IOU that will pay you interest on, kind of like a treasury yield.
Okay.
So like a 10-year treasury. You get like right now 4.5% to 5% on your money. And you can't have it until you retire or quit or get fired.
Right.
So you can't manage it. You can't put that
Failure.
IOU into anything else.
Yeah.
You can't borrow on it.
Okay.
It's just there. So now for the next 10 years, you're working with IBM, theoretically. and you're getting 200,000 this year and 210,000 in salary next year, 230,000 a year after that. You're growing and you're getting inflation raises and blah, 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 blah. But you're putting in 6% yourself. They're only putting in 5%. You are losing already 2,000 a year to start with.
Well,
They're not putting in the 2,000. They're
Yes.
only matching 10,
But-
not 6, 5,
but
not
it's
6.
not like that was guaranteed forever and ever, right?
Had been the norm for
Yes,
decades.
I understand that.
It's a
but
cutback. It's a
I don't know if
17.
losing is the
It's a
right
10,
word.
it's a 17% cutback
It's a
on the
cutback.
company's contributions
Right.
to your retirement.
Yes.
That's step 1. Step 2, what the money makes versus what you could make. If you're getting
Oh,
8% to 10% return in your 401k in set ETFs and mutual funds, and you're only getting 4 to 5% on the IOU money,
Yeah, yeah.
you are now really getting taken to the cleaners. This next 10 years,
Yes, your options
You-
definitely change.
your compounded losses are
yeah.
unbelievable. Now multiply that by the fact that you know how much money IBM has been putting into the pensions at 6%
Oh,
in cash,
a lot.
$500 million a year,
Yes.
500 million. They're not putting in
Yes.
anymore.
Right.
They've turned 500 million into an IOU. That's like a bond offering
Right.
without going to the bond market. They're keeping that 500 million
So,
in their treasury
are
and
they?
not handing it out.
They don't have to put it in a trust of some kind.
It's an IOU.
And we trust Big Blue.
Evidently, that's what the
Are there
employees are
other-
being asked to do.
Are there other corporations that have done this?
This is the
before?
beginning of, I think, the beginning.
Oh,
I
isn't
think this could be the
interesting?
beginning of a beginning that's really nasty.
But I mean, any employee share or anything like that, you always take. Always take. It's the only thing your company will give you. But yeah, this is. We know a man who has been at a company for almost 25 years, and traditionally, on your 25th anniversary, you get a Rolex watch.
That's true. This particular company we're aware of, and this particular individual we're aware of, traditionally, on the 25th
Here's
anniversary,
your Rolex. Thank you so much.
you are presented with a gold Rolex
Yeah.
watch.
Yeah, with the engraving on the back, celebrating this occasion.
25 years of loyalty to the company.
And he's just a few months away.
He's
from
at
that.
24 and a half years in to
Yeah.
this.
I think it's like 24 and 3/4, but yeah.
Yeah.
And now the company has come out and decided, well,
6 months ago, they changed that.
we're not going to do that anymore.
Unilaterally made an announcement that everybody gets an Apple iPhone watch. You get an iWatch.
iWatch, yeah.
You don't get a Rolex.
Yeah.
You get an iWatch.
Congratulations.
In Canada, you can buy an iWatch for $399, $499, or $599.
Not
A
a
Rolex, gold Rolex, is $10,000, $15,000, $20,000
Yeah.
for 25 years of service
So
to the company.
he's a little. He's
Is
little
he
pissed.
a $50,000 a year grunt?
No.
No. 25 years.
Yeah.
He's up there.
Is he a
and now
VP?
they are
Yes.
chinsing on their top guys. That has sent shockwaves through the
Yeah.
entire organization as another indication that we're not valued here as employees. We're
Yeah,
not, we
yeah.
are liabilities. We're not
Yeah.
assets. That shows right there.
And
That is,
it's just his poor luck that he is at the threshold.
I mean, if
that-
he were 18 years into it, 7 years from now, he's probably not even thinking about it. But you're at 24 and a half years, and in 6 months, you're supposed to get your Rolex, and you're not getting a Rolex? Yeah, no kidding. No
See,
kidding,
Bad
Sherlock.
time.
Yeah, that's it. Now for
But
my
yeah,
for my
Just
IBM.
another thing where the corporations
Oh yeah, and for the folks
pissing
here
people off.
today, I'm warning them. I'm saying, look, guys, I'm bringing you this IBM story because I doubt there's anybody here working for IBM. But I'm saying, if you're with an organization and this is going to happen to you,
Don't be
you've got
counting on that
you've
money.
got to be doing the math here.
Yeah,
I can understand if you're 50 and you only got 5 years to go, might not be a big deal. But if you're 38, 42, and you've got another 13, 14 years to go before you hit 55, your pension is just dropped $200,000.
Dramatically.
Like you have just gotten hosed, ripped off to the, if you stay that long, you've guaranteed yourself a major hit to your retirement. This is where I think IBM employees and any other employees of other corporations with the same story here could be vulnerable to being picked off.
Now, just
Stolen.
to play the devil's advocate.
Okay, let's play the devil's advocate.
What is the job of a company?
What is the job of a company?
What is the job?
Make money.
No.
Make a return for its shareholders.
Yes, keep your shareholders happy.
Make money, yeah.
By making money and making the corporation more solvent.
Sure.
By doing this, IBM has definitely impacted to the good their bottom line.
That's what we were talking about. I was saying to my viewers, think about it this way.
To make friends, they're there to make their shareholders happy.
Yeah, okay. So think about it this way. First of all, for the last 80 years, you've handed stock to your employees.
Yes.
How many employees of that corporation, let's say there's 200,000 of them, it's a pretty big number. 200,000 people, 190,000 of them are shareholders. You've just cut off 185,000 of them, 189,000 of them from becoming shareholders ever again, because you're not giving them stock. You're not letting them get stock with the money.
But they're probably still investing their 6%.
Maybe
4%,
maybe they are.
They should. Okay. It's the only thing the company gives you. Always take it.
Maybe they are into stock. So you've just told your own shareholders, we're not letting you get stock through us anymore. Except that if you're the president of the company, you have a $17 million package. The CEO has a $17 million package, $2 million cash, $15 million in stock. Those guys aren't getting cut back. The senior VPs, these people who are being paid in cash and stock, they're still getting their end of the bargain. Those folks down in the 100,000 range, you're not getting stock.
Yeah, this can't just be window dressing. They also have to be taking some kind of a lesser package.
Okay, so there's that argument.
Yeah.
Now, number two, you're IBM. All right, for 20 years, IBM's strategy to build value and wealth for its shareholders was one thing: make money as a company and use that money to buy back stock. And IBM bought back 60% of all the stock they had ever issued from their going public days until about 5 years ago. Then they changed management and philosophy to turn the company into a cash generator and reinvest the money into the business. Then they split the company into two divisions. And they have their IBM division, and then they have their other division, which I can't remember the name of anymore. And everybody got a split of stock, and they've reorganized, and now they're reorganizing this pension thing. Now, it used to be, and it is typical at Apple, for example, but I'm sure it's the same at IBM. All these big companies have money around the world, and foreign operations for IBM, Apple, Microsoft, and so on, they make their money overseas, and they keep that money in Ireland. And why? Because all profits booked outside the USA are booked through Ireland through a subsidiary company and taxed at a fraction of what the American tax rate is. The problem is the money accrues, the profits accrue in Ireland. So what Apple does, as an example, is they issue bonds through the US bond market, borrow money against the money they got. And they take that cash and buy back stock. IBM, Apple, $90 billion a year. IBM has been buying back stock to offset the stock they've been issuing to their management and their employees through their pension plan. But now that they're not issuing stock to their employees through the pension plan, they don't have to buy back this stock anymore. So they don't have to borrow money on the bond market to buy back stock. They're borrowing money from their own employees by giving them an IOU. And so the employees are funding a stock buyback program by the company not buying back any stock because they're not issuing any stock. So this means $500 million a year in cash stays in the treasury of IBM, which is good for the company that you work for, but the company is not rewarding you with a stock bonus that could make the stock go up. You are locked in at 4.5% interest in an 8% inflation world. So you're getting taken. And so if you're a small employee in IBM, 200,000 or less is a small employee at IBM. You have been taken advantage of by a minimum 17% cutback in the contribution amount, no matter what the amount was, and now what it is going to generate you going forward. And so there is maybe the new normal of corporate America, because
Right?
this is the
This could be a new
continuation.
thing that's being
It's a
offered.
continuation of a pullback. Remember, we have a relative that we know that worked all his life for a corporation. When
That's
he
how
s-
old we are.
That's how old we are. And when he started with that corporation, it was a private company. It wasn't a public company at the time he started, but it was a utility company that was ultimately owned by the government of this province. Then the company did go public, and the government slowly sold its position out into the marketplace, brought in billions of extra dollars to help fund its operations. But the corporation itself, alive and well, and this individual was part of the pension plan from day one, and the pension plan never changed. It was pretty well the same kind of pension plan. So when he retired, he had a guaranteed pension coming in, adjusted for inflation,
Guaranteed
indexed in, because it was company sponsored. Those are gone. Corporate America convinced the regulators in the United States to end that in the 70s with 401ks. The argument: let employees decide what to do with their pension money rather than a company do it for you.
I don't think it was ever regulated
Yes, it
by
was.
the government.
Well,
It was the company
It was-
offering this to their employees. It was not
no,
a regulated thing.
no. There were rules, retirement rules through government, through the feds, but the feds allowed corporate America to go to the 401k route, and
Okay.
all corporations went, "Oh yeah, we want out. We don't want to have to guarantee payouts to employees anymore. We want out. We'll just give them some money and let them decide what to do with their money.
Right.
And we're off the hook. We're off the hook for an adjusted inflationary payout." So now individual
and
people had to decide what to do with their money.
Pensions weren't their business. Stay in your lane.
Correct. But corporations hired pension managers who
Absolutely.
were their business.
But this
And
was
that
so
took
much,
care of senior management and others.
This was better for the company.
Yeah, oh yeah, it was a great win for
because
the company.
they just gave the government now ran the 401k instead
No,
of them having
no,
to
no,
do
no,
a
no. The
pension
government doesn't run
plan.
401k. 401ks are just like, they're individual plans for individual people, and it's the employee that's now
But
on
the
the hook to
government
decide.
doesn't set limits, parameters.
No,
Okay.
no. Now, employees can contribute money to a 401k
Yes.
up to a certain percentage of their employee taxable income and so on. Again, I'm not a tax expert. I've said this a billion times.
Right, but that's what I mean
But-
by it's government regulated. You can only put so much in.
So much in. And then the IRAs, you can convert into an IRA, which again, I'm not an expert in all this conversion stuff.
Right.
And in Canada, we have RSPs and company pension plans and everything. And I'm not going there. But what I'm saying to my viewers here, I do say, is I believe there are millions of Canadians and Americans and Europeans, maybe 100 million, who are out there right this second, who do not know and cannot fathom the fact that they could quit their jobs today if they really wanted to, and they could live off their own assets, including IRAs, RSPs, 401ks, pension plans of corporations,
Yes.
their equity in their homes, their equity in their life insurance policy, all the assets they have. If they reorganize them, not some cases dramatically, in some cases tweaks, they could literally now self-finance themselves for the rest of their lives, and they don't have to work anymore. And they don't know it. They don't know this because no one's out there to tell them.
And
Why would
busy.
IBM go to their employees and say, "Well, you could quit and be self-employed"? They're not going to do that. You're going to be stupid enough to allow them to take 17% of your pension money away, and you keep working for them? You're the idiot. They're the smart guys. GM just fought with the union tooth and nail, as did Ford and Chrysler, to not give the union employees what they wanted, but they did get what they wanted because the union guys know. UPS knows through their union, American Airlines, Delta, all the other airline pilots association unions, they took care of their employees. UPS took care of their employees because the union guys know we got to fight for our employees for their pensions. But many Americans who work for IBM or work for Apple or work for Microsoft or Oracle, or you name 1,000 other companies that are way smaller than these guys, Americans do not know, and Canadians, that how their pension even works.
No.
They have no idea,
No.
and there's nowhere to go because you cannot walk into the bank of a brokerage firm of Chase Manhattan or JP Morgan, they won't talk to you. You got what, 55,000 your pension plan, and you got so much in this, and you haven't even got $500,000. I don't want to talk to you. You're wasting my time. This is the problem that many people have in North America. They don't realize the power of the assets they've got and what they can do with them. And so no one's there to help them because they would like you to stay employed working for the crap you're working for, to take the crap you're taking. That's the reality of the scenario. I'm sorry.
But again,
and then there's the disturber.
Just to be devil's advocate.
Okay.
As an employer, I want my employees to be happy.
You would think so.
But I know if that employee is not happy, chances are there's a lineup outside my door of people I can hire.
You know what? That has been the normal, and Jen's got it right, has been the normal for the last 25 years until 2 years ago. Because what happened 2 years ago? COVID. And what happened with COVID? Millions of people were bought out of their jobs because corporate America panicked. Corporate Canada, corporate UK. I'm not picking on America. The corporate world panicked and bought off 50 to 60-year-old employees all over the place. Not all of them, but a big chunk. And a big chunk of Canadians and Americans retired early. They got this deal to take a hike, and here's your pension, here's your 401k, here's your IRA, here's your vested stock. Here, get out. Just get out, because they don't want to pay anymore. Mm-hmm. And after 6 months of benefits and a year of benefits, they're totally released into the wild. And the good news is many of those people who were let go found that their house went up in value dramatically during COVID. They had this buyout coming their way. They walked out. They paid off the mortgage, dumped the house, went to Sarasota, went to Tampa Bay, went to Phoenix, and retired, or have a winter home to retire at. And a number of other people who were in this age group became self-employed as consultants and are just happier as can be. And then a whole bunch of 30 and 40-year-olds got to move up the corporate ladder because there were openings ahead of them. Because corporate America thought, well, we'll bring up our 38-year-olds to the 45-year-old level. We'll take our 43 and 45-year-olds and bring them into the 50, 52-year level. And we have a younger workforce, healthy, and we got rid of all the old farts who have cancer and who get ill and who are sick, and we have these big
more expensive.
We'll buy them off, and we're just so smart. And the next thing you know, the recovery of COVID comes around, and there were 12 million job openings in the United States. And now we're down to 10 million. And the 10 million aren't janitor jobs. They're not burger flipper. Yeah, there are burger flipper jobs available all the time. No, we're talking skills. There's skill openings all over the place, and there are no bodies to fill skills. There's a lot of Guatemalans and Mexicans and Venezuelans who are dying to come in the United States and get jobs, but they're not qualified to be high-end software code decoders or whatever you want to. These skilled jobs, they're not going to fill that. And they can't get in legally to do it anyway. So employers in America are stuck. In Canada, there's openings in Europe for skilled, and there aren't enough to go around. So there's that.
There's that. But if that is, if that's what's not outside IBM's door, why are they doing this now?
They're right. And
they obviously feel they're still keeping the wheels turning.
Well, IBM could also be listening to advisors from Wall Street who are saying to them, look,
we'll save you $500 million.
Well, we're not saving you. We're going to make available to you $500 million of money you already have per year that you can put into your business and make your business larger. Now, IBM's argument is this, I think, hey, in the next 10 years, we got $5 billion of cash coming in, staying in our business that we can invest in our business to grow our business, because we're not doing what we did 20 years ago. We're not interested in buying up all our stock and shrinking the shares outstanding. We're interested in growing our business larger. We want to grow the capital business. This is $5 billion in capital in 10 years that will dramatically add to our bottom line, which means we're hiring people. We're going to become larger. Now, maybe we become more profitable with just as many people with AI that we're investing in and creating. Yeah, okay, fair enough. I get it. But in the end, what is the mission of IBM? To make money for their investors.
Keep your shareholders happy.
So shareholders are going to sit there and go, wow, they got 500 million a year into the business. That could add profits to the business, add profits to per share. That could lift the share price. The dividends can be increased to the shareholders. Win, win, win as a shareholder. Employees are asking themselves, yeah, I used to get 12% of my pay into stock. Now it's 6% of my pay into stock and 5% of my pay, this match into some IOU, which is not equaling inflation, can't grow. The principal can't even grow. It's just an IOU. And I have to ask myself, do I want the next 20 years of my career to be this?
Yeah.
At 200,000 to 300,000 a year? Am I interested in 5% of that going? There you go. And so they're vulnerable. They're stealable potentially by a company that'll say, you choose what you want to do with the money. We'll not only match it, but we'll give you a stock deal that is unbeatable. We'll give you a conversion rate into stock at a real nice discount, equal to what the president gets. Everyone here's the same, just how much money you want to put in. People might walk, and that's what I'm wondering.
It'll be interesting next year to look back and see what the figures are.
It'll be very interesting to see how many companies go to this way, how many employees shift, and how many people decide, you know what, I really love working for IBM, but you know what, I'm now only available to you through a corporation called ABC Consulting Limited that I and 5 other IBMers are now going to create. And we're going to work from home. We're going to work from a little office somewhere, maybe Bobby's garage. We're going to put an office up there. We're going to work out of there together as a team. And we're available on a contract basis as a corporation to you, not individuals, as a corporation. We're now self-employed through a corporate.
And IBM would love that.
Maybe.
I don't have to pay you benefits.
Maybe. And of course, they'll get double the hourly rate that they're getting now.
The joy of freelance.
And it's corporate to corporate and whatever else. And so there may be a viewer out there going, you know what? No, I'm gonna join Uncle Bruce. I've heard about this guy, Uncle Bruce. I'm gonna watch him now, and I'm gonna watch my own money. I'm gonna manage my own affairs. Thank you very much. This has pushed me over. I'm 51, and I don't want to be here for the next 7 years. I'm 41. I'm not putting in 14 years of my money into that deal. I'd rather be self-employed and help look after the grandkids and walk the dog and do all my affairs on these devices as they keep getting smarter and faster and better all the time. And I'm not commuting to the office anymore by train and back and all that.
I've been through those low economies though, where I was no longer being matched.
Yeah.
We and it did not.
Here in Alberta, we've had. This area of Canada is win, lose, penthouse, outhouse, the oil market. This town is oil and gas. And so when oil was $140 a barrel, and then it was $20 a barrel, and it was $80 a barrel, and it was $40 a barrel, and then it was $100 a barrel, we have
a lot of psychotic people.
We have seen the game played a million times over. But what's happened in this city in the last 15 years is a major change from what used to happen in the 70s and the 80s and the 90s. The big change now, most of these oil and gas companies downtown here, of which there are several thousand, they don't have as many staff anymore. They have got employees under contract. And
we're the highest tech industry in Canada.
Oh yeah. It's a young town.
We still have agriculture.
Yeah, and we've had hundreds of thousands of employees over the decades who've been bought off at age 50, 55. Some not happy, many very happy to take the walk. And we've had a lot of 30 and 40 somethings say, you know what, I don't need what my dad needed, what my grandpa needed, my grandmother needed. I don't need to be hired by a company for 25 years of security. I'm happy working under contract. I'll work for you for 10 hours a month. I'll give you 20 hours a month. I'll give you 5 hours a week. They're putting these kinds of deals together as landmen, geologists, and consultants, legal, accounting, every PR, everything. And then copywriters, our daughter, copywriter. She's a freelancer.
IT people.
And she's happy. And she would never think about, she's not even remotely interested in going back to a day job type scenario. No. And so the new normal. Now, maybe IBM is realistic and saying, this is the new normal. this is the way it's got to be. We as a corporation have to run this way, and we're sorry, 20-year employees. Sorry, but this is the way we're going to go. You decide if it works for you or not. And maybe they found that a lot of their middle management, they always leave after 5-8 years. They walk. They just don't stay anymore because they'd rather be contracted. I don't know.
The average employment is less than 5 years.
There's that too. And how many people have changed careers in the last 25, 35 years? How many of you have changed your careers? And how many of your friends and relatives have changed careers rather than have you been a lifer with one company the whole time? Very few have. That's a minority now.
For decades now, high school and college kids, we've known that they're going to have a job that doesn't exist right
Won't
now.
exist in 15 years.
Or no, that doesn't exist right now. While you're in school,
Oh, yeah.
the job you're going to have doesn't exist. So you have to have that wide field of vision of things that interest you.
And in the 80s, when the Rust Belt showed up in America and Canada, the Rust Belt began in the 60s and 70s, but just exploded in the 80s and the 90s.
Robotic.
We had millions of North Americans laid off because companies formed factories overseas at 1/3 the price, 1/4 the price, and or went with robotics. We had millions of people who had to retrain themselves. There was no choice. And what we had at that time, we had non-high school graduates 20 years into an auto factory job. They are now 39 years old, started at 19. They're now 39, 40.
Union jobs.
And those people had to retrain themselves to do another job. And there were winners and losers. And that was a gyrating and gut-wrenching time for a lot of people. And it caused oodles of problems in every aspect of the societal thing. Towns were wiped out. Marriages were ruined. Suicides. Everything. It was just mayhem. But now here we are, 2023. Many unthinkable things happened. And here we are in 2023.
But here's a thinkable thing.
Okay.
I'm going to stop this stream of consciousness we got going here. I'm going to go have a coffee.
Oh, well, you know what? It beats the alternative. And what's the alternative?
Not having a coffee.
No.
Oh.
Getting hit.
Getting hit.
So, honey, I think it's a wonderful idea that you go get a coffee. I think you should definitely go to the kitchen.
I'm not going to hit you.
No, not on the air.
I love these conversations.
We love these little chats. Folks, let me just get some comments for you because I'm sure there have been people writing while we've been yapping away. Okay, hang on. Beach Boy, how much is the class? Oh man, where am I here? What do we got? Good morning. Andy Jen, how you doing from Alberta? How you
doing, Alberta?
How you doing, Alberta? Waverly.
East Coast doing?
AI is on the run, says Waverly. Let's just take a look right here at some of these stocks. The Dow's up 80, by the way.
Okay.
So we have a positive start. It's not like we're going to the moon thing, but we're up 80. We're up 80. We got Enphase up 346, Spire up 130, Qs are up 170. Spiders are up 130, Qs are up 160. GameStop up 12, SoFi down just 9 cents. Apple up $1, Netflix up 230, Adobe up 530, AI up 180 to 3114. Everybody, congratulations, cash secured put writers on AI, and I still say congratulations on covered call writers as well. Well done. Waverly also, hello. Waverly number 112. JR, good morning, Auntie Jen. Good morning, everyone else. Number 112. JR and I had a wonderful visit on Saturday. We had a private 101. It was great. Isn't what you're talking about actually considered wage theft for Uncle B? Maybe it is. Beach Boy, hey, Auntie Jen. And if it were a unionized shop, they wouldn't be able to get away with it. Yeah. BP from SoFi report about the impairment, excluding the impact of a non-cash impairment of goodwill assets, we would have had a net loss of $19.5 million and an earnings per share loss of just 3 cents a share in the third quarter, which reinforces our confidence in achieving positive GAAP net income for the fourth quarter. Exactly. They are making money. Splayer, just in case, I'm wishing you all and Jen a great week, a great start to the week. Guten Tag, my friend. JJ, Uncle Bruce, IBM payments are retroactive. Do you expect other corporations to follow?
See?
We're going to see here.
Well, the street's gonna be listening and watching. for
That's right.
sure.
JJ, payment changes 5% limit. Splayer, by the way, did anyone notice that you pay at Louis Vuitton, for example, 280 euros for a perfume, but then the refilling only costs 100 euro? Does anyone notice?
Is that right?
Isn't that?
That's insane.
You see, Splayer's doing so well now. He understands the cost of
He's
perfume.
buying Louis Vuitton. That's. I'm taking my mason jar.
There you go.
There you
Yeah, I'm
No,
gonna
that's what I bought it
I'm gonna
in.
take my 2-liter bottle of Diet Coke. Can I fill this up? Waverly, my partner does actually not in the US. I don't quite know what's going on. Work for IBM, that is. Okay. My partner actually works for IBM.
Oh,
Splair, I'm actually falling in love with Pacific Chill and the papaya smell, says Splair.
okay.
JJ, it's nothing personal. It's just
But
business.
Does that mean the wasps like you if you smell
No.
like a papaya?
Maybe, yeah. JJ, it's nothing personal.
It's nothing personal.
It's just business. That's
That's
right. BW Wall Street making sure that the fund managers get their end of year bonuses. They get paid based on stock prices.
Absolutely.
So goose the markets at the end of the year, even in an inflationary environment. Machine algos are set to buy mode. The Credit Savage of Wall Street, by the way, Credit Savage of Wall Street is 3 kids. The wife spent the weekend at the Ritz-Carlton on behalf of the courtesy of
Very
option writers,
nice.
gamblers.
Oh, I
Credit
hope
Savage
she
of Wall Street.
enjoyed all
I'm so
the
glad I got
change.
off the corporate hamster wheel. I busted my ass to make sure our service was the best. What did I get? Here's a gold key, and you can turn it in for $350. Laugh out loud. Now they pay me 3 to 4 times as much.
I think I'd rather put my hand out and have it in 20s put into my hand.
Yeah,
than have a key.
Yeah, JR, no shenanigans here, right? I say, JR, thank you, Uncle Bruce, for the one-on-one on Saturday. Well worth the time and the donation. It was
Thank you,
great.
JR.
Credit Savage Wall Street. I became a mercenary, and now I am all business. Want my time? There's a premium. No, I don't work more than 8 hours a day. I'm done with project. I'm done when the project is done. 1 hour for lunch,
Right.
or pay me a premium per hour. Credit Savage, it's not personal. It's just business.
Just business.
My business.
That's right.
Don't have to hire me. Pay to train someone else for years and hope they work out. No, I won't train anyone. Pay me a training fee. Laugh out loud. It's just business. JR, wow, new class coming along just in time. I need this info. Splair, in Germany,
Yeah,
in the
this is
worst
gonna be a
case,
good one.
in the worst case, you start as a worker and never even know anything about the stonks until you're retired and everything is ending. JR, I've been a member for 15 months.
Woo.
Wow, reached the 15-month milestone. Thank you, Uncle B, for the great companionship and advice on the roller coaster called option writing. John Gill, I've been a member for 29 months. Thank you, guys.
John,
We've
way
had
to
a number
go.
of folks mention that. John, a dude has been a member for 14. John Gill, Gold Bagel, JR, Gold Bagel, dude, Gold Bagel member.
Dude.
Love you guys. JR, sounds like IBM had found a way to push out the older employees. Splair, are we now always 15, 30 minutes longer than on the air? I like it. BW, JR, sounds like they're pulling a United Airlines trick of sorts. With UAL, they wiped out the ESOP program,
Yeah.
going into bankruptcy. They claimed
Right.
9/11 for the bankruptcy, but they were failing already.
Yes, it was the
Dean,
final push over.
oh yeah, the socialistic U.S. government bailed out all the airlines for 9/11. Dean, tell Antigen, I'm sorry for your Steelers loss.
Well, me too. Boy, we had a bad first half.
and you had every
Holy
chance in the second
moly.
half to get first downs and touchdowns. and
Taking
you
timeouts
get
because we
nothing
had
done.
too many men on the
It was it was
That was easy.
not easy.
It's not.
They also wiped out the pension program then, so it all worked out well for United Airlines, not so
Yeah.
much for me or thousands of
Exactly.
others. Splatter Beach Boy, if we get 3,000 instead of 30 people in there, I think $1.50. Dude, you were cruising for a bruising, Uncle Bruce. Dude, thank you, my friend. BP, sounds like America company pensions are joining UK pensions in being defined contribution rather than defined benefit. Exactly.
Right.
But Splair,
Yes,
you of course
yes.
need the glass from there, but it's fancy to know that refilling costs only less than half from Louis Vuitton.
No kidding.
BP, placing
I
risk
know
with
someone who
individual.
really wants to know that.
Placing risk with the individual rather than the company. Oh, my BP. No such thing as a job for life now. Exactly. VIJ River VR. Uncle Bruce, do we cross our arms for all of the December 15 iron condors that were recommended? All blue through the call side. Bobby, isn't the alternative tea to coffee? VJ, we got all kinds of stuff to talk about, all these condors, which we will. And the
I'm
class will come in kind of handy on the
Bye,
9th.
everybody. Have a good week.
Jen's
I'll
out of
see you
here.
Monday.
She's had enough of you guys. She doesn't want any more of you.
No.
She can't wait for Thursday.
Oh, did you see what I did?
NFL
Let me
football.
show
Oh, show 'em.
I
What
caught
happened?
my arm in a door. Can you see
There
that?
it is. Cut
Look
your
at
arm.
that.
Scraped yourself.
I gave myself like a little blood blister. What an idiot.
Can't take her anywhere.
You can't take me
I'm taking
anywhere.
her down to California to get hospital treatment.
And
And
they
that's
have doors.
Now it's going to
Watch
show
out.
up with that. The doctor's going to go, how did that happen? What did your husband do to you with that?
Yeah,
She'll go,
that's
oh,
right.
he hits me all the time. I'll be in jail. It's unbelievable. It's ridiculous. See you later, Andy Jen. Oh man. VR. Look, this is what class number 17 is going to be all about. We'll be talking about this going forward through here. But in some cases, in many cases, we just fold our arms and relax. Let this market fire itself off. Right now, we're up on the market. I agree, but not a lot. 85 point run on the Dow. Quarter of a point. That's not very good. That's not very strong here. I think we're about to have a very quiet week this week. And next week, tax loss selling is going to start to dominate the show. We'll be around for a month. We'll hear about that for a whole month. I don't expect the market to crash, but I don't expect to go anywhere. And we may well see a number of what we call consolidations, which will take the heat off of options and everything else. Remember, too, condors on the call side is probably a lot of premium in there that's going to evaporate out. So chillax. That's what time will do for us. Interesting stuff. Thank you, guys. What else is going on? Better that finger, not the other one. Later, Auntie Jen, the feisty one, says VW. JR Splair. So it cost 180 euros for a glass bottle with a fake gold spray tip. What a racket. Splair, thanks, Jen, for staying so long as well. Not exactly 280 in the first place, but then if you go back to the same glass, you pay 100 for refilling the old bottle. There be deals out there, I guess. I don't know. I don't know. Whatever. Thank you, everybody. And thank you, those of you who are making these donations for the classes. They're coming through here. I'll be keeping an eye on that, and I'll keep a list of who's in, and away we go. So, yeah, all is well. Thank you all for being here. Let's see. Auntie Jen is so distraught from the Steelers, she's now cutting herself. You see, that's what's going on. BW, market's a bit on hold till NVIDIA reports tomorrow. I'm sure. The White House and Fed told their CEO, you will beat across the board leading into Turkey Day. You will beat. There will be no doubt. The Big E. Neat. Thank you, the Big E, for being here with us. Thank you, all of you, for being with me today. And thank you for those of you who have notified me how long you've been a member of the channel today. Just fabulous. How long some of you have been here. It's absolutely incredible. 118 thumbs ups today. I appreciate that. Have yourselves a great rest of your day. Keep an eye on the markets. We'll keep an eye on things over here. And we'll see what happens tomorrow. Those of you who are followers of TWB, I'll be on tonight, traveling with Bruce as well, 7 and 8 o'clock Eastern, depending if you're a member at 7, 8 o'clock for anybody else. You can always say hi to us over there. Thank you all for your participation in today's show. 87-point gain on the Dow, it would appear. Spiders are up 163 and the Qs are up 214 at the moment. Enphase 97.10 up $4. GameStop holding a 16-cent gain here, 13.18. SoFi 674 on a volume now of 14.3 million. An hour and a half into the session, I'm guessing. Interesting stuff. The high today, 676. We're right there, right at the high, just about right there. So, all right. Maybe we can gain a little more from that. Apple's up 130 to 191. Netflix up 450. Adobe up 570. The AI is up $2.02 to 31.33. Cash secured put writers enjoy. Same with SoFi. Enjoy the move up higher. NVIDIA's up $4 at $496.99. There's about an 8% swing probability on NVIDIA on average based on the potential results tomorrow night after the bell. That's what they're saying out there. That's why the premiums on the options are so wild and wacky. Tesla down $1.24. Rocket Lab up 14 cents. Matterport down 2. SmartRent up 3. We got ATIP up 13, I think. Unity's up 76 cents to 29.96. Google's up 54. Moderna up 2.80. Cisco's up a nickel. Pfizer's up 22 cents. IBM up 71. We've got HBQ down 28. Microsoft up 3.79. ME up 5 cents. Amazon is ME is at 90, by the way, 90 cents. Amazon 145.84 up 66. Home Depot up 12 cents. Vanik Semiconductors up 84. Goldman up 129. Boeing's up a nice $7.14. Meta up 4.38. Target is still down 72 cents. JP Morgan is off 5 cents. Costco up $1.80, trying to recover from those losses last week. Walmart up 38 cents. Disney up 56 at 94.71. American Airlines down 2 cents, and DraftKings up a penny. AMC is off a penny, and Royal Caribbean down 16 cents to 105.38. There's our story. I'm sticking to it. Been on the air now for 2 hours, 10 minutes. I thank you all for being with me today, and thank you for the knee attacks coming out here. Splairs on the knee attacks. So is JR. Neat is what they are saying out there. Same with the big E. Absolutely. Thank you all. Wall Street and White House. Keep reading it right there, old man. Bobby, HBQ is reporting tonight. Karen, neat. JR, dang, slept in this morning and missed a buy app opportunity on SoFi. Chase, Rosita, neat. Yeah, it's... you got to get up early depending on where you live. Isn't that something? Thank you all. Have a great rest of your day today. Thanks for being here. I will keep you posted on where we're at, and you keep me posted on where we're at, and we'll see if you guys just keep getting richer. Thank you, all the newbies out there, for joining us. And remember, Class 17 is on December the 9th coming up. Make your donation as soon as you can. I will get you locked in. Send me an email confirming your donation so that I have your email address for the link of the class. Saturday noon, December the 9th. We'll see you on that class, number 17. Thanks, guys. Splair, thanks, pal. You take care. Chase Rosita, thank you. I'll catch you guys tomorrow. All the best. Bye for now.